Hello everyone, this is Teddy Keckstedt from Forex Trading Unlocked, and we are here on April 22nd with a Forex and cryptocurrency live market analysis for you. Before we get into that, we want to just let you see our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. And also, if you haven't done so, please subscribe to our YouTube channel or our Twitch channel, whichever you prefer, or even both. So, and also check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in both paperback and Kindle versions. Alright, now with that all being said, let's get to our Forex-Trading-Unlocked.com website. And on the workstation page, we're going to toggle down and start to look at what's going on with the markets here. Alright, so the Euro-US dollar got hit pretty hard. There's a lot of news, obviously, with flaring up tensions with Russia and Eastern Europe. Eastern Europe, not just the Ukraine, and it's obviously weighing on the euro. The euro has been a bear, and most likely, especially with what's going on right now, it's going to remain so. There's a big talk about them cutting off complete ties as far as with energy from Russia. This is going to be very expensive and hard on the EU. Especially some of the powerhouse countries like Germany that are the big engines as far as financially and also industrially for the EU. So it's going to be very hard, and it's going to weigh, I would say, be one of the most fundamental factors driving the bearishness for the euro versus the US dollar and many other currencies as well. So right now, especially with how they are, I wouldn't say they're even remotely trying to defend their currency, although their currency still is strong. The fact that it has come back off of where it's been for the past few years and it is now treading very close to coming to parity with the dollar, that still is a strong valuation. It has to get below parity before I would think that the EU is going to start to jump in and try anything financially to help support their currency. Unless the only thing I could think of that they could do in the short run would be to do a rapid raising of interest rates, but I don't see that happening anytime soon. But you never know. We'll see. It's going to be very interesting. So, by the way, for any of you that's watching here on either Twitch or on YouTube, don't forget to leave a comment in the chat box, because that way we can answer any of your questions live while we're going through this. So especially right now, if you have any questions about the majors or even any of the other crosses, like for instance, we're talking about the Euro-US dollar right now. If you have any questions about some of the other Euro crosses, if that's what you trade, don't be shy. Just let me know on the chat, and we will get to answering that. All right. Okay, cool. So back to the Euro-US dollar. Thanks for the like there on YouTube, by the way, whoever did that. All right, so the Euro-US dollar is pounding support. I would be very leery of trying to catch a falling knife right here, right now. If you are looking to buy, wait for a signal. And right now, I can't see how anyone is generating a buy signal. The oversold, most of your indicators will probably be leaning towards buy. Let's see. Now, obviously, the technicals overall are obviously on sell. Performance, you can see how poor that's been. So everything is buried in the sell zone, but that doesn't mean that we're not going to get a bounce. The one thing you have to remember is that right around 107.5, where it's trading just above right now, is key support. And usually, if it spikes below that, it doesn't maintain it for very long. This is just historically speaking. However, right now, with the bearish overtones of what's going on with the Russian conflict and the fact that it may grow, that is something that probably will outweigh any. First of all, technicals are out the window. I would be very cautious with that. And even if you do try and fade, obviously take a counter trend trade, meaning be a buyer with the Euro-US dollar. Use some very rational expectations for your target objectives, and also as far as your risk. Once again, don't try and pick a bottom ever or a top, and right now is not the time to try and pick a bottom. So I would look for rallies to sell into more than breaks to buy. That's just, I would say, would be erring on the side of caution, and also just the right thing to do. So, but anyhow, all right, we don't have any questions about the Euro-US dollar yet. Okay, that's fine. All right, so let's get some of this going on here. All right, so if we go back to this major swing low here and the last major high, let's see what we've got done here as far as with the fib numbers. So our 0.618, we fell through that one. And now we're here on the breaking line here of 0.78. And we have fallen below that. Okay, so that's critical as far as Fibonacci. If this is going to find support here and somehow get neutral, this would be pretty much the inflection point of it. You can notice here that we had found a bottom here as well. And also if we go back to here, there was a heavy degree of trading from basically where the market's trading now back up towards where this 50% line was. So let's get the full look here. So if we go, obviously here was, let's go to right here. Here was a good support area, and this here is a good resistance area. So right now we're basically falling back into, if you look at this is on a monthly scale here, by the way. If you look at this, we are falling back into a range where, like I said, we find support historically. So 107.5, as you can see right in the middle, this is a good bounce point for us to see if we were to get a correction higher, to find a little bottom here and then get a bounce. However, I think we're more likely, with in lieu of the new things that we found out, is with Russia especially, that we're looking to test this last prior low here. And if we test this low right here, down at 106.23, a failure here definitely has us prodding around these lows and maybe even making new lows. And could we see parity? Once again, that is very possible. If the conflict continues to grow, and especially as we start to head into the summer, and if this thing continues to go, as I don't see any short-term slowdown to this conflict, it's going to really start to impact commodity prices, especially food prices. And we're going to see this globally. It's going to really be a challenge for many countries around the world, except for certain countries. Certain countries aren't going to have such the issues as the rest of the world. Japan, ironically, is doing very well as far as handling inflation on all levels. The only thing is the commodity pricing. That's the only thing that is out of control for them, but that is for everyone in the world. So because of oil and what have you and all the other raw materials that they don't produce because they have to bring them in for their manufacturing and what have you. So, which we will get to, and these are things that are also impacting the Eurozone as well that makes it a bear. So these fundamentals are driving a lot of the bearishness, once again having us set up for a rally to sell. So as you can see, we tried to set a little bottom here. We haven't taken out the low from a week and a half ago, right here around 107.60. But we're treading right above it. We're going into the weekend. European markets are now closed. The Asian markets are closed, so right now all we have left is what's going on in the U.S. I would say we're probably going to see things are going to be pretty quiet as far as the euro, U.S. dollar, and some of the major currencies for the rest of the day. I don't see us really unwinding and unhinging too much. Let's pull up the CME website. Now remember, with futures, everything is in a lag. By law, you can't broadcast anything live, and we're also going to the sources where it's delayed anyhow by a few minutes. So we're going to check out the interest rates. Remember, interest rates are a function of currency pricing. So we have basically a flat bond market and a flat 10-year market. The interest rates as a whole, yeah, they're basically have gone nowhere whatsoever. Even well, we don't have to look at the euro. That we know is going nowhere. So all right, so that means that as far as the interest rate factor is concerned, there's nothing going on there. So if that's a dead trade and that's flatlining, it's going to be hard for the currencies really to get much going on. So I would assume it's Friday. We're coming off of a holiday week from last week. So I would think that most people that have returned, everyone's pretty much shutting down. And like I said, we've already closed Asia and Europe for the week. It is the weekend there, so there's not much left on the table for currency trading today. But it doesn't mean we can't try and figure out how things have gotten here, especially today. We did have a big surge in the dollar. Now remember, today's was very news reactionary. It just happens that some of these markets got unhinged. Speaking of unhinged, we're going to get to that in just a minute. But as far as the euro, just in case we do find some support, we'll take this last swing high here. Now remember, we're coming off a lower move low and a lower move high. The trend is secure right now as far as we know. Let's go here. We have the 0.618 and the 50%. So if we're looking for a corrective area, this would be the spot right here. This is the upside correction. I think that this would be about the extreme that you could see for any correction. It's the upside. And if you notice here, it kind of falls right in its downward sloping resistance line, keeping the trend intact. So for upside, I would say this 109.69 up to 110.20 area is pretty much about all you're going to see, and I don't even think you're going to get that far. You would have to take out the high from yesterday, which yesterday there was strength going on, but everything reversed gears. And once again, this keeps us in this sell rally forecast where you're more likely right now to be able to take advantage of a slide break, meaning going lower in the market than rather any type of rally. So I would wait for, if there is a rally, wait for it to push extremes and then look for a reason to sell it, because I think no matter what, fundamentally, even though the technicals want to turn this market around or at least have it neutralized for a while and maybe go into a little sideways swing trade, the fundamentals are outweighing it just too severely. So that is something you have to be very mindful of. All right, so let's real quick check. Do we have any questions on YouTube? We do not. How about on Twitch? We do not. Okay, well, all right, guys. Let's just keep on going then, right? Okay, so we are going to go to the British pound, US dollar. All right, British pound, US dollar is on its lows. It is getting just shellacked today. So, obviously, this whole spreading out into Europe thing with Russia along the eastern countries, or potential to, is impacting the UK and also the British pound. Let's see what's going on in the oil market. So we know the interest rate market is not causing any movement as far as the British pound is concerned. And you know that the energy issue could be, though, because with the EU cutting off Russia, now we have oil is down $1.63, so that's definitely putting a little pressure also on the British pound. So I would say that because of oil and also with the issue with what's going on with the EU, as far as with energy and what have you, I think that that's weighing on the pound. I don't think you're going to see a continue. I mean, we have a big falling off today. I would expect that probably when the market opens tomorrow, or not tomorrow, on Sunday rather, that you may see a little bit lower of a low, but I would expect you to see a nice bounce. Remember that also that the European markets are closed right now. Okay, so this started, the European markets were open last night, and then when they did, spam, we just got wailed on. But as you can see over the last, I mean, right now it's 11, almost 11:30 Chicago time, so we're at 11, 10, 9, 8. This is when the hour when the U.S. markets open. So since they've opened, all we've done is take the low down a little bit more, and that's because we were trading into the close of the European session. So, and this has to do with the European session. It has nothing to do with the Asian session right now, because the pound is right now, I know, as far as against the Japanese yen, it has fallen back, but it's a very big bull versus that right now. All right, so pound US dollar, as you can see, is definitely a big bear. I would definitely wait right now to be cautious as far as buying, wait for it to stabilize. Whenever you have the pound reacting with this kind of a range, I mean, look at what we've done here. We've covered a lot of ground today. The high for today was 130.35. The low is 128.28. You're looking at a $2 move, you know, that has occurred over since, well, in just the past half of a day, you know, since last night when the European markets opened. So this is a significant move for the pound. And for any of you that trade the pound, you know that one of the great things about the British pound is when you are on the right side of it and you catch a move, you get surges like this where it just really, really is nice as far as on a helping to lift your equity curve, that's for sure. But that's also why with the pound you have to be careful with your stops. Always know your risk and be mindful of that, because when this market moves, it moves hard without a doubt. It is the second biggest currency in the dollar index. It is the third largest currency in the world, you know, so when it moves, it is a big deal. And it also impacts the dollar. Obviously it's giving dollar strength, because of any other currency that if it was weak against the pound, obviously today is probably not that week, but since the dollar is that much stronger against the pound right now, that gives the dollar strength against other currencies as well. So the dollar index is definitely getting a lift, and especially with the euro being on its butt as well, that doesn't help either. So right now, the dollar index going into the close of the weekend is definitely showing some really bullish signs. I would use caution though about going into the weekend's trade. You may still see some follow through when the market opens on Sunday, but I wouldn't doubt that you see a little bit of a reversal of fortune and profit taking. So this is when you have to be mindful of the fact that markets come out like they go out like they come in. So we were pretty stabilized here, and then we stirred this up in a big way. And usually when this happens, you get a short-term bounce with a nice little profit-taking rally before it turns back and hits support. I'm not saying that this slide is over by any means. Who knows what happens over the weekend politically. But then they may all of a sudden say on Sunday we're going to have a ceasefire and some potential peace talks. You never know from day to day. I hope that happens and that hour and day comes sooner than later. Nothing good comes from war. And also remember, all warfare is based on deception, and right now on both sides we don't know really what in the world is going on over there. We just know that the casualty list is definitely increasing. So that's all that matters, is that people are dying, and it shouldn't be happening. So, but anyhow, as far as looking for a bounce target, I would say that the first upside target, if you will, to shoot for would be right around here, right around this 129, 130 even area. So this would be obviously where we had found support. We were trying to hold up. Now I think you're going to see it find resistance. So any type of correction that starts to pull up towards this area, that's when I would start to look to sell into it and then risk something like the last swing high right here. So remember, this market's been making lower move lows and lower move highs. That is indicative of a bear market. Don't forget that. All right, let's go to the US dollar. Swiss, like a balloon underwater. This thing is insane. Talk about the rally yesterday. We're in the follow through today. I mean, now the one thing you have to think about is how quickly can this get to parity. Because of the situation here and the stance that the Swiss took on with the Russians, I think our potential to see parity. Originally, I was thinking more around like come the end of the summer, somewhere between July and August. Like I figured it would grind and chop higher, and especially start to have problems once it gets up towards the 97, 98 area. But we're already pushing 96 going into this weekend with some news that seems to just pretty much give a lot of support to the bullishness of the dollar versus these European currencies. What the EU is doing, especially, I mean, the Swiss have money, but let's be honest, they're an island inside of the eastern of the European countries. They're in the middle of everything, and they don't have resources. I mean, they have money, but they have some resources, but as a whole, they have to bring most of their in in. So, and to take advantage of that under the current situation is becoming harder and harder. It's going to weigh on their economy in a big way. And I would think that, especially when it comes to on a government level, that the Swiss government is going to, the cost of running the government is probably going to get very, very extreme over the next 3 to 6 months. These things also, considering with their monetary policy, unless they start to raise interest rates on their end, or there's other things they can do, because remember, the Swiss are big holders in currencies and debt around the world. Should they start to say that they're going to maybe stop purchasing euros or something like that in the short run, which is very possible, to help support their currency and not care about the euro, because if they gain strength versus the euro, it may help to slow the bleed against the US dollar. That's how these things actually work. They have ripple effects. Whatever you do in one currency versus that have an impact in pricing versus other currencies. To what degree, it all depends on which currency you're talking about, and that's what I see happening here. The velocity of this rally is starting to become extreme, but if you really look at it, it's not too severe. I mean, if we come back here, we know here's the overall slow slope of the trend of the way it's been. we came off of this area and bounced really well. As you can see, this came down, boom, we had this nice buy signal, and we thought we were going to run into some resistance here. Then we had this initial lift off here. The key was taking out this last swing high from back in March. Once we did that, and I think this is the key as well, I would expect that we start to run out of gas. And just how I said with the pound, don't think that you may not see some profit taking. I wouldn't doubt that maybe we have a profit taking correction if, let's say, things somewhat calm down in the conflict. If they have, like, let's say, a short-term ceasefire talk for 2-3 days, that would be a situation where there might be a pullback and a selling off of the dollar versus these currencies, giving you a chance to catch a breakdown towards that 94.46 area. Should we get down to that 94.61 area? And once we get down to here, I think that this will become a support area and we'll start to swing around. I would expect that we will probably not see a correction like we saw back here. I think you're going to see more of like a correction like you saw here, and then see a bunch of sideways trading develop. And that would be somewhere around this area here, where this is the upper end of the range. If you look at how this has been going, all right, we're kind of widening out there, so let's bring it down to right here. Okay, so if you funnel this out, and this is how it's been channeling up, it's starting to get a little bit more extreme. It is widening out the spectrum, which means this is, by definition, the way this support line and this resistance line holding the channel is moving, this is widening out. It's starting to lift. So I would say that you're probably going to see a little bit more of a push to the upside going into Sunday, Monday, and then probably see the cap, because odds are is that unless we can settle above here today, and then if we maintain a trade above here and settle and obviously get another rally on Monday, that changes the forecast. But I think right now we're running out of gas. I would expect us to have a correction back towards this 94.61 area, and then find some support and bounce around a little bit. I wouldn't expect to see the US dollar Swiss maintain a trend this severe, unlike where the other currencies. I could see the euro continue to pressure lows, and I can see the pound maybe continue to chop a little bit lower, and see the Swiss start to find a topping area and find a little bit of a digestive range compared to the other two. Just because I don't think it's going to be as impacted by all of these things as the UK is, and also as the EU is. Got to remember, Switzerland is not that big of a country, and it doesn't have the resources of the UK, let alone the EU. So it doesn't also have the issues either. So it's and that also is a benefit for them. So that gives the Swiss a little bit more strength. Remember, the Swiss is normally a flight to quality currency, but because of their take and how they're dealing with Russia and breaking with their normal rules of being neutral, that negates them being a flight to quality currency. So that's why this is no longer really, it's basically in a buy dip forecast. But I would be careful at these levels right now, and if you are long, I would probably raise your stops to take a profit and then take advantage of a downturn, where I could see us easily pulling back a good $2, maybe even $3. We may fall below this 94.61, find support around 94 even here, and then get our next leg up. So that's what we are through with that. Now let's go to the US dollar, Japanese yen. Now this baby has been, talk about a currency that is a bull. This thing is relentless. Today's volatility is not quite as extreme as it has been earlier in the week. However, we are pressuring resistance, and we are aiming towards that 130 target. Now, oddly enough and interestingly enough, there's something that you really need to pay attention to when it comes to the Japanese yen, folks. The Japanese yen right now, as it stands, we had a line in the sand at $1.30. 2 weeks ago, when they had that last correction, that was because of the Japanese bank coming. This right here, we had rallied up into this here, was on a Monday, and then that Monday they came out and said we're going to support and defend our currency. We will not let it go fall below $1.30 versus the US dollar. So this is a line in the sand for the Japanese, and usually at the time I took it as a very serious thing. I actually got out of all my longs. Everyone that follows me knows I was net long the U.S. dollar yen since last summertime. I finally got out. Not only did I get out completely, I got short and bobbled around there, and then reverse gears here on this day right here. The reason I reversed it was because they hadn't done anything, and then there was a nice little room to still make a play for that target, especially because the way the bond market had fallen apart earlier in this week and during that time in the U.S. We had a severe bond slide of, like, I think it was 4 or 5 basis handles within 2 days, which is a big bond move for any reason, and there was no reason to do it. There was no speak, if you will, that came out or anything else like that. So, and the fact that the bond market, remember, we're in a battle confrontational situation right now. The bonds are a flight to quality, and now they're a bear. That influences currency pricing, and when you have that drastic sell-off, that it gives strength to the dollar versus the yen, especially because even though the Japanese said they would defend their currencies, the question would be how much would they raise rates? Well, this week they reversed gears on it to some degree. The president of the finance ministry, the head of the finance ministry, he is all for defending the currency because in the long run, we're in the short run right now, there is a benefit to the cheaper yen because their exports are flying off the charts. But the only reason they can really withstand it or have been able to is because their inflation isn't like it is everywhere else in the world. It's actually been relatively stable, and that's to their luck in that context. The Bank of Japan, which had originally came out and said in coordination with the finance ministry that they were going to defend the currency, this was 2 weeks ago, reversed gears this week and said that they are going to. This is what really shocked me, and I need you to pay attention to this. It's very important. They said that they are going to buy unlimited Treasury notes to maintain a quarter of a percent interest rate in their bond market. That goes against defending your currency, because if you have low rates and defend it from going up in rates, that means you are not helping the interest rate component. The easiest way for them to support their currency would be to raise interest rates and definitely slow the purchasing of the bond market. In other words, they're artificially holding up their bond market and keeping the rates at an artificially low level, meaning 0.25%. And the fact that they said they're going to use they will be unlimited purchasing to maintain that. To me, I understand what it means verbally. However, as far as financially, I don't, because I can't imagine the scope and the resources it would require shifting from Peter to Paul to pay for such bond purchasing. And that, I think, could get the Japanese into a lot of trouble with their debt market. So, and once that happens, I could see a snap in the yen, where we see a monster move, in a show of strength. Not that the yen is going to be that strong of a currency, but because of how beaten up it is, it's probably going to see. I mean, even if, let's say we had a 10% correction just right now. I mean, look at where we've started out the year. We were at, let's see, the high at the beginning of the year was 116.35. The low that we made back in January, in the middle of January, was 113.48. Okay, so 113.48, and right now we're trading 128. That's 15 handles higher, $15 higher. That's all occurred in the past 4.5 months. Okay, that is a huge move. But okay, so let's say $15 to the upside. Okay, so if we were to have a 50% correction, we go from here to here. All right, so if we were to have a true snap, and not even like where the market becomes bearish, we could go, look at this. See, this is key. Okay, so we have the 50% 0.618, and I'm going to put in the 0.382 as well. Okay, there we go. Let's get this out so it's clear. So this is our 50% level right here. And if you notice, you got this last swing low right there. Boom. So if we were to just have a 50% correction and not exceed that and maintain bullishness, and maintain this swing low here as a higher move low, a higher move high, and then establish a higher move low still in this area, that would be a nice size correction. That's a $7 correction, over $7 correction right there. Okay, so there's a lot of volatility and room for, now let's say, like I said, if we have this interest rate thing, if they were to defend their currency, meaning that they were raising rates and what have you, you could see it go from 128.83 where it's at right now, or if it was even up at 130 even, down to at least 123.38, probably within a period of, I would say 2.5 to 4 days, somewhere in there. I wouldn't even think it would take 3 full days to do so, and easily come down to this 121 within a week's time. Very, very possible for it to do such a thing. It could even do it within, I would say, 4 days. I think that would be a little bit extreme. I would say probably leaning towards something more like 5 to 7 trading sessions to get down all the way to test this low. I don't see that it would come down this far, though, because if they would have to raise rates in a very extreme way, and remember, the Fed is about to raise rates again also. So that's going to have to compete against the US dollar, and we don't know that the Fed is now looking to possibly do, no matter what, at least 2 to 3 times in the next 9 months, a half a point at one time. So, and I wouldn't doubt it if they do it on the next meeting. So right now we are bullish, targeting that 130 level. Once it gets there, we thought that that was going to be the line in the sand, but with everything that's going on in the world, and especially with our Fed going to be raising rates and looking more aggressive than they were originally, I think that 130 is a short-term price target to the upside, and 140 to 150 somewhere between the end of the summer into, I would say, the end of September. So somewhere between beginning of August and the end of September, I could see us being into that above 130, well, definitely above 130, but actually probably trading above 140, pushing towards 150. This would be, now, like I said, as long as the Japanese are going to maintain, if you have the Bank of Japan that says they're going to keep on doing all this bond purchasing with unlimited purchasing power, or purchasing, that's just not going to help the yen. I can't even begin to say, and even their finance minister says that there's no way the yen can be supported with this action. It's just impossible. So, and even around this is not me. You can look at it. The news came out about this 2 days ago in the Japanese Times. It also came out in the Financial Times. It broke through the papers and also from the government. Then it was all over Reuters. Reuters is always first, and that's why they have probably the least bias, because no matter what, they always break it. No one ever says that they started false news. Then it goes to Bloomberg. Bloomberg came out with it, and then CNBC followed with it afterwards. So CNBC being the last one I would listen to, but even it got so big, the fact that it spread around the globe like that, because usually like 2 weeks ago when they came out with the Japanese thing first, that they would defend their currency, everyone kept their mouths shut. So I was just stunned back then. So, all right, well, now we have our levels there to the upside and to the downside. Let's go to the Australian dollar, US dollar. So for you guys that trade the Aussie, it looks like the pound falling apart. I think a lot of this has to do with the sell-off in oil right now. It's not really a sell-off, but it's like down $1.50 or something like that today. And a little profit taking. Obviously, this market's been in a correction. The Australian dollar, US dollar intermediate term, though, is a bull. I think that right now you are just playing with support, looking to find a bottom area in the short run. Excuse me. And I wouldn't doubt that sometime between Sunday and Monday that you find a bottom with this market finding a reason to rally. But let's see. Let's look at the Fibonacci area here. All right. So, if Fib is any indication of what's going on, there we go. All right. So 72.29. So this would fall into my scenario of us coming down and finding some support somewhere between Sunday night and sometime on Monday. This is the key level. If we take out this low here at 71.68, or right around 71.68, if we take this area out, basically 71.60, whatever, then I would say we're still neutral. It would have to really start to pound support and continue lower. Obviously, then it would be a bear. It isn't a bearish correction right now, and I look at it as a correction because it has been making higher move highs and higher move lows. The key is are we now about to make lower move lows and at least make this market neutral, let alone confirm the short-term overall bearish pressure. So this market is much more severe in weakness over the past two sessions than I was expecting, especially because I had this initially as a buy signal right here. This was a 1, 2, 3 day buy signal pattern that just fell apart and failed. Guess what? They don't always work, folks. You know, that's why you have your risk and you don't have to worry about it. You know, so this signal did fail. It did have, let's see, we fell. It fell apart. Let's see, when did it fall apart? Probably around, let's see, which one was it again? It is 73.41, 73.41. So that fell apart. Yeah, it was last night. It was right around when the European stuff started to kick into gear, that the Aussie really started to get hammered. So that's when it fell through that and took out that buy signal. So, and that also confirms weakness. That's the nice thing about when you have signals like that, and that's a high probable Japanese candlestick pattern. When they work, they're great. They hit their targets. You have a good profit ratio, and they also pay for when they don't work like this, because you're always usually making upwards of 3 to 5 times your risk. Now, in this case, fell through it. The risk wasn't too bad. You know, it was, that when it fails, that, oh, wait a minute. If it fails, that means the trend is obviously confirmed, that's stronger than originally thought. And that was also, remember, that was a trade going with the trend. So the market had already been in a correction. So obviously the correction is not over. Bearish strength is overwhelming right now, so use caution. And as you can see, as we're talking, it is still making new lows. Wait for a reason to buy. I would wait until sometime between Sunday night and Monday to find a at least short-term bottoming area. But I would probably wait for Monday's close to confirm any potential, at least short-term pause in the market where you might see a little bit of a lift and get a chance to catch a rally. Remember, that would be still trading with the trend. The short term, you're in a bearish correction, but longer term, this is a bull. We're looking for a break to buy. A couple days ago, we thought we found it. That failed. So this is what happens, and this is part of trading. That's why you always have defined risk and defined targets and things like that, because that way you don't have to worry about the negative equity swings. All right, so New Zealand dollar, US dollar is also following pretty much in tandem. It's getting hammered just as well. Now this is the key thing you got to look at. Remember I was talking about that low with the Aussie? Well, New Zealand dollar is playing with it right now. So now here's the thing also you got to remember. New Zealand dollar is a little bit, it's not as strong against the dollar as the Aussie is. As you can see, this correction is much more severe that it's been coming off of. A lot of this has to do with the COVID restrictions that remain in place in New Zealand, and it's definitely impacting its economy. So that's one of the reasons you have to be worried about trading New Zealand dollar right now. I would look to capitalize more off of breaks than rallies. However, this market is still somewhat strong. Originally, it was on a bullish plan, but now considering how it's taken out this low, I think it's ready for more of a big sideways than anything else. Once again, wait for a reason to buy. Don't try and catch a falling knife, especially with this one, and make sure you keep your risk pretty tight with this one as well. All right, let's go to US dollar Canada. This one, talk about all over the place. The last 2 days, boom, has made a lower move low after slamming hard early in the week. And now, like a balloon underwater, bam, it's going up again. I'll tell you what, this thing is, I am very bearish this thing overall. I am surprised at how this thing is reacting. Today, it's gotten through the 0.618 level. It's trading just above it right now. It's showing a lot of strength. Overall, though, I am bearish this thing. I can't believe how it's done what it's done. As you see right here, it's coming right into this downward sloping resistance that's keeping this trend hopefully at bay for the bears. If not, especially if we get a close above this trend line today, and if we see follow through it going into Monday's trading, well then, Yeah, it's going to be a rough call. I think it's going to be settling into this chop zone. Overall, I'm bearish the market, but if you look at it, it's just coming right back into where it's been trading for the majority of the time for all of 2022 so far. So, oops, I took that off by accident. Okay, there we go. All right, so this is the area where it's now right in the middle of, and you could easily, this would go with my scenario if all these markets are overzealous and overdone and they start to run out of gas going into Monday, then this would be the right area for it to top out at and then start to go sideways or even go lower. So we're going to wrap up with a little cryptocurrency look at right now. Bitcoin US dollar starting to fall down on support again. Yeah, this thing just can't catch a true show of strength. Lower move lows, lower move highs are indicative of what? A bear trend. So this is what it's going up against right now, is the bearish momentum. And I think that unless you can get back above this high from yesterday, you are more likely about to take out this low from last week. 38,550 has this thing really back on edge, heading back down towards the mid 30-something thousand level, like 36,000, 34,000. Overall, I think you could even see this market dip back into the upper 29,000 handle over the next couple of months, especially if the bearish momentum shows any significant strong sell-off over the next couple of days. Ethereum I don't think is as bearish as Bitcoin is, but I do see it taking a slide. As you can see, it's under the same conditions. I would key off of the high from yesterday and the low from last week to give you your breakout points. Any failure from here has us back on edge. Now, we pretty much ran out of gas. I keep telling people Ethereum from 3,200 up to 3,800 is definitely, it's where you start to take profits, and usually it falls back. I think it's always a good selling area there, and then look to buy it back down somewhere between $26,000 and $2,400. The Ethereum network definitely has a lot of viability in the short run and longer term for uses and what have you, but at these levels, once you start to get up towards 4,000, it starts to become an issue, and we're not even going to get into that conversation today anymore, but that's my valuation. If you listen to my past videos, you know why. So, and right now I'm looking to see this thing test support. It's all good with me. I'm looking for a nice little break area, and once again, I think you can pick it off for a nice trade. Buy it down around, like I said, that definitely below 2,800. I would say like 2,600 down to 2,400 in that range, and then look for a pop back up to where it is now, at least, you know, where if you can unload around the 30, anything above 3,200 up to 3,600 is a great profit taking area. I actually just unloaded some a few weeks back, and I'm actually looking to buy back down probably around 2,500, 2,600. So we'll see where that gets, what happens with that. So I'm looking forward to this bearish momentum, and I think that if we can take out the low from a few at 2,800 there, or basically 2,880, if we take that out in the next couple sessions, especially over the weekend, I wouldn't doubt that this weekend's trade might see some good activity, and if the bearish momentum comes out to play, then yeah, I would expect a slide to where I could probably get back in around the 2,600 down to 2,500 level sometime next week, which would be very, very nice. Be a nice quick little pick-off trade for just the month of April for the Ethereum market. All right, before we end this webinar, we're going to go back to Euro US dollar and also see if we have any questions out there in YouTube and Twitch land. All right, thank you for the shares on YouTube and Twitch. We don't have any questions going on, so I think what we're going to do is we are going to wrap up this webinar. I want to thank you guys once again for showing up today. As always, we appreciate all of your support. Please pass it on to your friends, and remember, if you have not done so already, check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions, and also make sure you subscribe to our YouTube channel, Forex Trading Unlocked, or our Twitch channel, Forex Trading Unlocked. And oh, sorry about that, got a little thing passing by the office there. Definitely if you are interested in looking at the book, you can go on our website, forex-trading-unlocked.com. There's a whole page dedicated to that you can find from our navigation bar, and get a little reading of it and get a sampling of it to see if you are interested in purchasing it. And if you're an Amazon Prime member, you can read it any time on Kindle version. So we do get a lot of people like that. We obviously, I do know that a lot of our followers are Amazon Prime users, just by how it gets read on that, which I appreciate it. Every time you guys read there, it still is good for me. I appreciate it very much. All right, with that being said, you guys have a great weekend. Look forward to seeing you guys next week. We're going to put out a video later on for once the markets are closed about the week ahead. So Teddy Keckstedt signing off for Forex Trading Unlocked on April 22nd.